Hello everybody, and once again welcome to Synonomics. It's a beautiful Wednesday morning in Melbourne here, and last night actually Nasdaq continued its run, though it actually dropped from the peak but closed much higher. Though Dow was down, everybody is pretty much anxiously looking forward to getting the result of this debt crisis resolution which the Democrats and the Republicans are working on. And that's why the market was not very enthusiastic last night. Having said that, the gold rush for AI continues, and some of the stocks which are pretty much in the AI space have done extremely well. And the one that I'm going to introduce today is AI, C3.AI rather. AI is the ticker. So which has actually closed at $44 last night, and which is 33.4%. So it's a 33% gain in one day. So pretty stellar performance. Other than that, since Nvidia has reported its earning and forecasted a extremely strong Q2, Nvidia has been pretty much on a solid run. Jason Huang, who is the CEO of Nvidia, actually mentioned a couple of things. He said that Nvidia is no more compute platform. It's actually a networking compute software platform. It's pretty much a Gen AI, generative AI in a box. He also mentioned that most of these data centers where they have seen huge growth, most of these data centers, 95% of them are on CPU and only 5% on GPU, and that's going to change very soon in the next few years. And this will reverse. 95% will be on GPU and only 5% on CPU. So that opens up a huge opportunity for companies like Nvidia and the other AI software companies like C3.AI. So C3.AI is actually kind of a leading provider of enterprise software for AI. They provide comprehensive services for the enterprise systems for the applications, especially in the AI space. And they also claim that it's most efficient as well as cost effective. So let's understand what exactly they do. So as I mentioned, they provide the software for all these enterprise softwares like CRM, etc. And they use the predictive analytics to actually predict things. For an example, they will look at what's the inventory level now and what it should be. Those kind of things basically. And they're seeing a huge demand for most of the companies. Now they're actually moving in the AI space, and they are focusing mostly on the Fortune 1000 companies. So the good news is that actually this company was established almost I think 1992 or something. I am not sure about it, but since then it's some loss. And recently they actually announced their quarterly earnings, and that was the Q3 2023, and it was better than expected. Actually, the revenue was 66.7 to be precise, $1 million versus 64 million market was expecting. Similarly, their earning per share was minus 6 cents. So basically, they reported 6 cents per share loss as compared to 22 cents per share loss that the market or the analysts were expecting. So it was much better than expected. Having said that, though they only have to report one more quarter, Q4 in FY23, for the whole year FY23, they are expected to report a revenue of $266 million at a loss of around 70 million. So still pretty much in the loss segment, but they are kind of coming out of that. And the reason they are seeing is that a lot of interest has been there in the corporations. The good news is that they have go-to-market partnership with Google Cloud, with AWS, with Microsoft. Also, they have other stronger clients like EY, etc. So they have a pretty solid client base from that perspective. And the founder and the CEO is actually Tom Siebel. If you guys remember Siebel Systems, pretty much a market leader, or the guy who actually started the CRM systems. He was the founder and the CEO of Siebel Systems, which was merged with Oracle in 2006. And after that, he established this company. So pretty much in good hands, and he's quite optimistic. He thinks that there is 600 to 700 billion dollar market out there for the enterprise AI software. So as I mentioned last night, it actually had a stellar run, closed 33% higher in one day. But having said that, as I mentioned earlier, it has dropped from 171, so its price was around $171, and that had dropped down from there to almost $20 or $15 like that. Now with all these new AI or generative AI boom, it's getting back to normal. Many analysts believe that it has a potential to go up further. So that was all about C3.AI. I'll encourage some of you who have not looked at that, go and do some analysis and look at the ticker. The ticker is AI. Again, coming back to the financial analysis of that, I mean, as I mentioned already, it's still a loss-making company, so earning per share and all those is minus, something like minus 5.5 or something, 50 cents or whatever. So price earning ratio doesn't make sense here to talk about it. If you look at from the technical analysis perspective, of course, with 33% gap increase and all those things, it has actually broken. It has broken all the trends. It has broken out rather. That's what we call in the technical analysis. So it has broken out, closed at $44, 43.95 to be precise, and its next hurdle is around 50. And after that, its next hurdle is $72. So if it crosses 50, it will hit $72. That's what the technical analysis of this stock is all about. And remember, these are all my analysis. So wherever I'm getting all this information, I do mention that in my video. So don't make any investment decisions based on that. This is only for analysis and educational purposes. Please contact your financial advisor before making any investment decisions. With that, I like to highlight some interesting facts about FANG. So these are the companies who are actually growing. So if you look at S&P 500 in US, only 5 companies have been driving the whole market. And these 5 companies, as I mentioned to you, is Apple, Amazon, Google, Microsoft, and Nvidia. The rest, 495, they have got a very nominal returns, I would say. Coming back to the FANG, so it started with FANG, and then another A was added. Now with Nvidia, another N has been added here, and with Tesla, it has become FAANNGT. People are calling it Magnificent 7. So for some of you who don't know that, so F is actually Facebook, which is called Meta Platforms now. A is Apple, Amazon, Google, Netflix, Nvidia, and Tesla. So with that, thank you very much for watching. And once again, I'll thank you all for your support and request you to like, share, and subscribe to this channel. I'll keep bringing you these interesting facts. And some of you who wants to get some more details on that, please leave your comment in the comment section and I'll cover those as well. In my next video, I will be covering another similar AI software company which has been moving up and up. It's called Palantir. Palantir, P-A-L-A-N-T-I-R, Palantir. So the stock has gone from pretty much $7 to almost $14 in last few weeks. With that, thank you everybody for watching and goodbye from me. It's Pankaj Sinha from Melbourne. Bye-bye.